This is Scott Becker with the Becker Private Equity and Business Podcast. We're thrilled to be with you every day. We're here today with one of the brilliant private equity leaders we get to visit with regularly, one of our most listened to interviews, Rick Kes, a partner at RSM. RSM's the leading name in private equity. Rick talks to us regularly about issues he's watching in private equity. Rick, tell us what's going on. I see a ton of activity, particularly amongst the biggest name funds. I saw Apollo is taking a shot at investing in Intel, not exactly private equity, but alternative asset type of work. But tell us what you're seeing out there. What's going on in the private equity community, particularly in light of the most recent Fed rate cut?
Yeah, I mean, obviously, I think most people were anticipating a cut. 50 basis points was, I think, probably the best news, that we could have expected. So that was very favorable, I think, in the private equity space. It was expected, but just because it was expected didn't mean it was necessarily for sure going to happen. But what I think also, comes out of this is how much more cuts will there be, right? I mean, I think, there's, according to, our economists who are tracking the dot plots and other indications of where, Fed bankers think rates will go. I mean, I think there's an anticipation of maybe another 50 basis points by the end of 2024, and then even maybe a little bit more in 2025. So, I think with that, I think we've got a lot of optimism now kind of in that right direction. So, I think, as we've talked about in previous podcast episodes, the large funds, I think, can react and act quicker when things are changing. And the mid-market funds that we are typically working with, those funds tend to lag just a bit because of just different challenges that they face versus what the largest funds in the United States face. So, I think we'll start to see those mid-market funds finally going back and saying, okay, we have dry powder to put to work. There are investable assets out there. Interest rates have come down to a position where we can start making activity. We think they'll continue to go down, and hopefully they're able to go out and make some of the buying and selling of assets that they really need to do to put that dry powder to work to get their limited partners the returns that they're expecting.
Thank you very, very much. And how quickly are you seeing the acceleration in calls coming in, business coming in, people talking about deals in the mid-market currently? What's your take of the temperature there?
Yeah, I mean, I think we had seen an uptick in calls in August, and continue to see more activity through all of September. Obviously, 2024 has been a bit of a slower year for deal activity, but kind of the alternative data sources of just calls and questions and RFPs around diligence services and things like that. I think we're continuing to be optimistic that the rest of 24 that our people will be very busy doing deals and working on deals. And then I think in 2025, just with the pipeline that will kind of get built up for the rest of this year, I would anticipate a lot of activity being closed in 2025, and then hopefully again other investments that will occur throughout the year of 2025 as we continue to hopefully see more and more cuts on the interest rate through that period.
And private equity professionals have been slower through part of the last year. Do their handicaps get better, or do they not get better because they're more under internal stress?
Great question. I know my handicap hasn't got any better. I unfortunately continue to golf very poorly. I enjoy being out on the course and having fun with my friends, and actually going out tomorrow with my wife. So that will be really nice. Our kids are back in school, so she's got a little bit more time to do fun things like that. So, I'm getting out and playing a little bit of golf, but unfortunately, I'm not getting any better at the game. It's just too difficult for me to figure out how to chip and putt any better than a mediocre level. So unfortunately, that's where I'm stuck.
Do you think that next year, do you have any sense of what next year will look like in terms of the private equity business? How busy do you expect? What's your sense of what it's going to look like next year?
Yeah, I mean, I continue to be thoughtful around things like 5-year term on debt that was extended in 2025. Some of those balloon payments coming to fruition. or that was extended in 2020 and coming due in 2025. I think about things like the dry powder that's out there, the anticipation that some of these deals that some of these companies that these private equity funds have held on to for 6, 7, 8 years because of pandemic and interest rates and everything else. I continue to believe that something's going to have to shift, and things are going to have to move around. Assets are going to have to trade hands. So I think at some point we're going to see something pop here, and I think this interest rate cut, news definitely does, kind of fuel that fire. And if they continue to cut rates through 2025, I think that will only continue to add more and more kind of wood to that fire to keep that fire burning for all of us. So that's where we think that things are going to shake out. I think 2025 should be hopefully a pretty good year, especially the first half of that year. I would think, a lot of this deal activity will start to have to happen, and transactions will have to close, because I think, just the nature of where things are at, it's kind of like something's got to give.
No, I think that's exactly right. We certainly see more interest in funds wanting to dispose of some of their deals, but also seeing them also like not wanting to dispose of good ones too. So it's really a complicated situation, isn't it? We see some funds really want to hold on to their good deals. So they're scared to sell those, so leave themselves with inventory of a lot of investments that are okay, not great. What's your sense of that?
Yeah, I think that's consistent with what we're seeing. I mean, I think there's a lot of investments that people made that maybe didn't result in what they thought that they were going to get. They didn't grow as quickly they did, or the market changed. Some of the investments that you bought in 2020, some of the things that were really attractive back then, perhaps that level of attractiveness has changed, and the consumers mindsets have changed. A lot of that's changed since 2020 in the eyes of consumers, and that's really what drives the overall economy of the United States, is where are consumers spending money. And and unfortunately, if you made an investment in something that was really, really profitable in 2020 or 2021 because of pandemic impacts, and today things have changed and the consumers mindsets have changed, perhaps you want to like move on from that investment and restart and figure out where else could you find an opportunity to provide ROI to your LPs.
No, I think that's exactly right. And Rick, what are you most excited about currently? What is there a specific niche or area, or just the evolution of the market right now? What gets you going right now? What are you most excited about?
Scott, I think you know me well enough that I'm always excited about healthcare. I think healthcare continues to be an area where, just because it's one of those things that has a pretty inelastic demand. No matter what, people are going to want and need healthcare services. So I'm continuing to be optimistic about healthcare. I'm continuing to be optimistic about the move to value-based care. And I'm continuing to be optimistic around care for seniors, just given the demographic shift that we'll continue to see over the next few years. So I continue to believe that investments in value-based care, or and because that obviously overreaches into seniors, because of the focus around Medicare Advantage, that I think anything that touches those two elements, I think will continue to have a lot of people interested in them. Now, the rubber hit the road if people can actually make money in that market. That's a tough market to make money in. It's not as easy as some other industries or some other verticals, because so many complicating factors of trying to manage populations and manage utilization of care and all those kinds of things. So it's a tough business, but I think the demand for that business will continue to grow as population continues to get bigger and bigger in that sector. So I think that's where I'm most excited, is I'd say value-based care, and really focusing around delivering care to seniors in one way or the other.
Thank you very, very much. Rick Kes, RSM, always great to speak with you, one of the brightest people in the business. Thank you very much for joining us today on the Becker Private Equity Podcast.
Thanks for having me, Scott.